Hello, hey, good evening, Gerald.
Hi, Benny. Hello.
All right, looks like I can hear you well. You guys who
Good.
are online, if you can hear us, can you just say yes on the comment section so that we know that you are able to hear and see us? Okay, we just wait for some feedback first, yeah. have you taken your dinner, Gerald?
Yes, I have. Yourself?
Yeah, I just did. Thank you, Jonathan. Okay, we are still getting streams of people coming in. But before we start, let me just do a few house rules first. If you guys have any questions, you can just type it down on the comment section, and I will bring the questions to Gerald to answer at any point of time. I will not interrupt him in his presentation because he does have a presentation slide. But whenever there's a break, then I will fit the questions in for Gerald to answer. All right, and please make sure that the questions is only relevant to today's topic, lah, which is how you can actually ride the EV or electric vehicle trend in Singapore, right? Because we know that NEO, one of the largest now, quite a large EV maker, has listed. Basically, it's a dual listing, right? And they're listed in Singapore as well, just 2 weeks ago. So we want to hear from Gerald, but before that, let me just do a disclaimer first. Whatever that is being shared here today is only for educational purposes only. It's not intended as any investment advice. So if you want to have an investment advice, please do consult a licensed investment advisor. All right. So we have today Gerald Wong, who is the founder and also the CEO of beansprout.sg. Maybe Gerald, you can also introduce what Beansprout do for investors, right? But he has been an analyst for many, many years. He's a CFA charter holder. So he's basically a person that you can look for opinions, not advice, right? But opinions that he has this vast experience being an analyst. All right. So today the topic is basically on um, the electric vehicle sector, and we know that the EV sector has been one of the catalysts for the markets actually, right? Because you can see that most of the traditional automobiles are moving towards the combustion engine, the normal engine that we are all used to, and now moving into a more clean energy electric vehicles. Right. So of course we have Tesla, the front runner for electric vehicles, but now we do see a lot. And of course, how can Singapore benefit from this, and how can Singapore play a role in this market, right? Especially in the Southeast Asia or even Asia region. So that's why we have Gerald here with us to basically share with us how does he see the EV sector play in the Singapore and also this region. All right. So, yeah, maybe you want to introduce yourself a little bit first, Gerald.
Sure. Thanks so much, Benny. So, my name is Gerald. I am the founder and CEO of Beansprout. Like Benny mentioned, I was an equity research analyst for many years covering the Singapore market. I started Beansprout last year, and really what we want to do is to provide you with insights on the markets. So, I guess that is the purpose of the sharing tonight, where we hope to be able to share some of our thoughts around the EV sector so that you can understand it better before thinking about whether to invest in stocks within the sector.
All right,
Okay,
awesome.
so
So I'm going to leave Gerald. He'll do some presentation first and how you can, I think it's quite some exciting information for you guys. So remember, if you have any questions, please do type it down, and I'll bring the questions up later. So sorry, Gerald, to interrupt you, but please go ahead.
no problem. Thanks so much, Benny. So I shared a bit about Beansprout earlier. What we really want to do is to provide you with the investment insights. If you found today's session useful, do visit our website, follow us on Instagram, or follow our community discussion on Telegram, where we have more of such discussion about Singapore stocks, US stocks. Okay, Benny has shared the disclaimer earlier, so I shall not repeat this again. But really, what we want to go into tonight is discuss what is behind this very exciting EV growth story. In the long term, we know that there is very strong demand for electric vehicles, but we also want to find out how has the EV sector performed recently. So we will be finding out some of the near-term trends in the EV market. Lastly, we'll go through how you can get exposure to the EV sector through the Singapore Exchange. Benny mentioned NIO as one of the recent listings, but there are other products that we can get exposure to the EV sector in Singapore as well. Lastly, we want to keep this as interactive as possible, so do share with us your questions and we will be answering them after this presentation. Okay, so we'll start with trying to understand a bit more about the very strong growth for electric vehicles. Really, what is the buzz around electric vehicles? You have seen pictures of these cars being shown around, you have seen your friends talking about it, but the perspective that we are coming through tonight is not really which model is the best, whether you should be changing
Mhm.
your Toyota to electric vehicle, but to think about it from a investment perspective and whether we should be investing in EV stocks in the market. So, if you're not aware, you can now find electric vehicles in Singapore. So, Tesla started selling in Singapore in the second half of last year. And when it actually launched sometime in the fourth quarter of last year, it was the top selling car in the Singapore market. So, this really reflects the kind of excitement and demand for electric vehicles that we are seeing in the Singapore market. And it is not just in Singapore, but in many different markets worldwide. We have seen this exponential growth in EV demand. So here's a chart showing the global EV sales. If you look at, say, 2020, it was just above 3 million units of electric vehicles being sold globally. Last year, it increased to about 6 million, so it doubled on a year-on-year basis. And it is expected by 2025, there will be more than 14 million units of electric vehicles being sold globally. So this is really a very strong growth trend. You don't see a lot of industries growing like this. And really what we want to do is understand what is driving this very strong growth. Okay, so globally, we are seeing this shift towards clean energy. In some of the key EV markets like China, US, and Europe, there are a lot of policies that is moving away from conventional fuels and towards cleaner energy generation. So looking at China as an example, it aims to achieve carbon neutrality by 2060. In the US, they intend to reduce its net greenhouse gas emissions by more than 50% by 2030 compared to 2005 levels. So, across different key markets, there are very ambitious targets to bring down carbon emissions. You probably felt that it has been very hot in recent days and months, and really what we want to do is to reduce the greenhouse gas emissions, reduce global warming, and part of this EV demand is driven by the shift towards cleaner energy sources. So if we're to look at global EV market, there are a few key markets we need to know about. China and Europe are the two largest EV markets currently. China represents close to half of global EV demand. So that is why in a lot of the EV discussion, it is around what is driving the demand for EV in China, what is the regulatory landscape in China, because they represent a very big part of the global demand. The other key market is Europe, which is also at the forefront of this EV adoption. It represents close to 40% of global EV demand. The US is a bit further behind, just representing about 10% of global EV demand. But what we have seen in recent years is that there's been a greater push in terms of policies given to drive the adoption of electric vehicles. Okay, so if we look at each of these individual markets in detail, looking at China to start with, what we see is that the adoption rate of electric vehicles is higher than the global average. If I look at the share of electric vehicles as a total of new car registrations, then that represented 13% in 2021. And that exceeds the global average of 9%. So this once again shows how China is ahead of many other countries in terms of the EV adoption. The other key market that we discussed earlier is Europe. So this is also where you have seen this hockey shape change in terms of electric car adoption. Now close to 10% compared to in the past few years when it was just at single digit levels. So the other key thing to take note of when we are discussing the electric vehicle sector is to really understand the global supply chain. So to understand what is driving this very strong increase in EV production, we also need to understand what goes behind the entire industry. So to actually think about electric vehicle, we start with the raw material mining. So this is actually all the raw materials such as nickel, lithium that goes into different parts of an electric vehicle. Thereafter, we go to the battery cell production. So the battery is a very important part of the electric vehicle, and some of these raw materials go into the production of the battery cell. Once the battery cell is produced, then we go into assembly of the battery pack, and this subsequently leads to the manufacture of the electric vehicle in itself. Once we are done with the manufacturing of the EV, we go to EV product distribution. So this is effectively the distribution of the electric vehicle to retailers in the market. Once the EV has been sold, it doesn't end there. There are still various EV services that come along after the sale of the EV. So this will be things like how the EV is being charged, how the EV is being maintained. So that constitutes part of the EV services thereafter. And the other interesting part about EVs is that once we are thinking about the components, some of it can be recycled as well, such that they eventually go back to the battery cell production once again. So this is really the entire EV supply chain that we are looking at, which is very important when we are trying to understand the very strong growth of electric vehicles over the years. So one of the key drivers leading to this very high growth in electric vehicles is the improving EV infrastructure that we are seeing globally. One of these examples is through the public charge points. If you are looking at Europe as an example, you see this very strong increase in charging points across Europe, and that is leading to more people willing to be buying electric vehicles because it is now more convenient to charge. You wouldn't have to worry that, oh, you drive this car to work and then it runs out of battery. You can't actually drive the car back. Those issues are being gradually resolved as we see more charging points being installed. The other key driver for the adoption of electric vehicles is that battery costs have come down very significantly over the years, and battery costs are a very important cost component of making an electric vehicle. So if I were to look at this chart coming through from BYD, electric vehicle maker in China, what you see is that the cost of the batteries have come down very sharply from 200,000 yuan about 5 years ago down to less than 100,000 yuan in 2020. So this has helped to bring the cost of electric vehicles down such that it is more comparable to your traditional vehicles and has driven more people to want to buy an electric vehicle rather than a conventional car. Okay, so those are the long-term trends in the EV market. For the next session, we'll be talking about the key developments in recent times that you need to be aware about. The next time when you're having a discussion with your friends about EV, you can bring out some of these points for discussion, such that it's not just about Tesla, but also some of the key developments that we are seeing in the industry over the past few months. Okay, so we start with trying to understand what are some of the key players in the EV market. What everyone is very familiar with is probably Tesla because of Elon Musk. It is also the largest EV maker globally, which is why everyone relates Tesla to electric vehicles. We also have other more established EV makers like BYD. Some of you might be aware that this is a company that Warren Buffett invested in at a very early stage and has helped him to make very good returns on the investment. We also have some of the newer EV makers, so names like Rivian, Neo, Xpeng, that are catching up very quickly in terms of their production as well as in their technology. We'll go a bit deeper to be talking about one of these companies, Neo, later on in the presentation. Okay, so the other point to take note of when we are talking about the EV players is that the traditional automakers are also trying to get into the EV space. So what we see here are a few newspaper articles talking about Hyundai investing in a plant in the US to be building batteries. So this is a very big investment of 5.5 billion, and this reflects the kind of investment that traditional automakers are also putting into the EV space. The other company is GM, General Motors, also investing very significant in EV. This time putting 6.6 billion into a plant investment once again in the US, because it has got targets to be raising the proportion of EVs as a percentage of the total sales to 40 to 50% over the next few years. So it is not just the traditional automakers that want to be in the EV market, but many different players that we are really looking at in this highly competitive EV market. Okay, so we'll look at the market share. We shared earlier that Tesla is the largest in terms of global EV sales, but we also have quite a number of key players that also have a significant share. So this will be companies such as Volkswagen. We've got SAIC and BYD in China. And also we have got a lot of other players, companies such as New, Xpeng, that are wanting to grow their EV production and capture a larger share of the entire market. Okay, the next key development that we need to be aware about is really the supply chain constraints in the EV market. So what we have seen starting from last year will be all of these supply chain concerns because of potential lockdowns in China, because there's a shortage of labor after the COVID recovery. So what Tesla has noted is that they expect the supply chain issues to be stretching through 2022. For most of last year, the issue was relating to a chip shortage. So that has left a lot of the automakers being delayed in terms of their production as they cannot get enough of the semiconductors that go into making the electric vehicles. The other part of this global supply chain shortage also relates to rising raw material cost. So to understand that, we need to look at the different raw materials that go into a battery. These are some of the raw materials that might be familiar to you when you are learning about how a battery actually works. So this will be things like lithium, nickel, cobalt, copper. Those are the things that go into a battery, and they are very important components that help to drive the battery production. So what we have seen is that a lot of electric vehicle makers are facing shortages in these raw materials currently, and the shortage is most significant in two materials, including lithium as well as nickel. So what we'll show next is a chart of lithium. If you look at the price movements over the last few years, we have generally seen a fall in the price of lithium all the way through 2021. But since the middle of last year, there has been a very significant spike up in lithium costs, and that is really driving an increase in battery cost, such that for the first time in decades, battery costs are starting to be going up once again. So what do the EV makers have to do to offset the higher raw material cost? they have to be raising prices such that they are still able to make a good margin on the EV sales. So here we see two examples. Tesla really got the price hikes going by mentioning that they are increasing the prices of Tesla EV in the US 2 times in 1 week. So that is a very significant increase. It's not common that you see such a price increase over the course of just 1 week. What other automakers actually did is to follow in Tesla's footsteps, such that what we also saw is that NIO has raised prices for its electric vehicles to be able to pass through some of this higher raw material price. So the last key development that we need to be aware about is really on the regulatory framework, because the policy shift has been very important in terms of driving EV adoption in the past, and any change in regulations can also change how electric vehicles are being seen by consumers in different markets. So, looking at the biggest market, China, as an example, what they did this year is to cut the subsidies on new energy vehicles by 30%. So, this is actually a very significant reduction in the subsidies given to new EV purchasers. And what investors are concerned about is whether they would remove these subsidies completely at the end of this year. So there's a lot of different discussion now in the market as to what the Chinese government would actually do. And what you might see would be newspaper articles like this, where there is actually different sources suggesting that China is in talks with the automakers on potential EV subsidy extension. So this is not confirmed. We still have to see what regulation comes out thereafter. But to understand whether we'll see a continued strong adoption of electric vehicles, this is something we need to keep a very close lookout for to understand whether subsidies will continue and whether it becomes continually attractive for consumers to be buying electric vehicles. Okay, so we have gone through the long-term structural trend of increasing EV demand. We have also looked at some of the recent developments in the EV sector. Next, we'll go in depth into understanding how do we invest in electric vehicles in Singapore. So the exciting development here is that NIO, the largest Chinese EV maker amongst the newer startups, have actually started listing in Singapore just 2 weeks ago. This is a secondary listing. Its primary listing remains in the US. It also has a secondary listing in Hong Kong. So what this means is that you can trade NIO in 3 different markets, in the US, in Hong Kong, and in Singapore. The important thing to take note of is that the shares in Singapore are fungible with the shares in the US. What this means is that if you have a share in the US and a brokerage in Singapore, you can effectively transfer your shares from the US to Singapore for a certain cost, but effectively the shares can be transferred from one exchange to another. Okay, so just a brief introduction about NIO. It is a Chinese producer of premium electric vehicles. So the market that it is really targeting is the premium market. I mentioned earlier that this is a secondary listing in Singapore. The primary listing remains in the US. And what NIO really differentiates itself is through its technology, including its battery swapping technology. So you might have heard some of your friends talking about this very innovative battery swapping technology that they have, where a car owner can drive their EV into one of their battery swapping stations and get their used battery swapped into a new battery within a few minutes. So that actually helps with the whole logistics and infrastructure of EV adoption, because it then becomes very fast for someone to be able to charge the car and be able to use the electric vehicle to travel longer distances. NIO also has very ambitious growth plans. It wants to be in 25 countries and regions worldwide. It recently launched in Europe, and it is trying to increase its sales in the region. So we saw earlier how Europe is one of the key markets for electric vehicles, and that is a new market that NIO is entering into. With the listing in Singapore, it is also looking to expand into Southeast Asia. So it might not be long before we are able to see some of these new electric vehicles in our roads in Southeast Asia. So there are a few key models that NIO actually has. We mentioned earlier that it targets the premium EV market. So those are generally at a higher price range compared to your common EVs in the Chinese market. So we have seen actually how quickly NIO has grown in terms of its EV sales over the past few years. If I were to look at their first model and looking at this sales, it was 11,000 units back in 2018. It introduced a new model in 2019, and that has helped to drive the further increase in EV sales. And when we were to look at what it is in 2021, then we have seen a further increase in the sales to about 90,000 units, which is a very significant growth compared to back in 2018 when it was just above 10,000 units. And if we were to look at the financial performance of NIO, the increase in production of EVs has translated to an increase in the revenue of NIO. So if I were to look at the 2021 revenue, it stands at 36 billion Chinese yuan, close to double that of the 2020 levels. Its gross profit has increased in line with the increase in revenue. But what is important to take note of here is that while it is generating a positive gross profit, it is still making a loss at the net profit level. However, the company has recently stated that it is targeting to break even in the fourth quarter of next year, and 2024 might be the first year where it is able to become profitable. And this is really a result of being able to ramp up on its production and be able to see an increase in sales through this increase in production. Okay, so we have talked about NIO. The other instrument that investors can look at for the EV sector in Singapore is the Nikko AM Straits Trading China Evfm Etf. So to be able to invest in a single stock, you probably need to do quite a bit of work trying to understand the company, what are its latest EV models, what are the company's financial metrics looking like. But for investors who want a diversified exposure to the entire electric vehicle sector, that is really the idea behind an ETF in which there is a very broad-based number of stocks that is in this ETF, offering you diversified exposure to the entire theme of electric vehicle. So let us take a bit of a closer look into what this China Evfm ETF is about. So it is not just electric vehicles that we are looking at as a pillar of investment, but we also have future mobility as a theme of investment for this particular ETF. We spoke about some of the key supply chain components of electric vehicles earlier. So that relates to things like your automakers, that relates to your battery makers, that relates to your raw material producers. And they are all part of companies that this ETF can potentially invest in. But apart from the EV supply chain, there are also other key themes that this Evfm ETF would be looking at. And this would be relating to themes of the sharing economy and high-speed transport. So, for example, for the sharing economy, that will be things like your car sharing, your ride sharing. And for high-speed transport, we are actually looking at different high-speed transportation technology as well as hydrogen cars for those who want to be thinking about other technology that can drive innovation in the long term. So to look at each of these components individually, we have the electric vehicle manufacturers. So this will be companies such as NIO, Xpeng that are very actively involved in EV production and can potentially help to drive greater adoption of the EV with the innovation that they bring into the market. The next one is the hardware and components. So this will be things like your battery makers. It'll be things relating to some of the different components that go into an electric vehicle so that you don't have to be thinking about whether it might be better to invest in the automaker or the battery maker when thinking about the electric vehicle theme. It also involves software, so this will be things like your autonomous driving, where a lot of the Chinese automakers are making significant inroads towards as well. Uh, we also will be looking at infrastructure, so things like your charging network. There are also a lot of companies that are developing the infrastructure relating to electric vehicles, and this will be companies that this ETF will be investing towards as well. So to summarize, this ETF is more than just about electric vehicles. We are looking at different companies in the field of energy storage technology, autonomous vehicles, shared mobility, and new transportation methods. And what it really tracks is the China All Shares Future Mobility Top 50 Index. To understand what are some of its top holdings, there is a short list here. So it'll be companies like NIO, Geely Auto, BYD, Xpeng, so that you don't have to decide whether you want to be investing in one or the other. But having this ETF would offer you broad-based and diversified exposure to the entire sector. So with that, I've come to the end of the presentation. If you'd like more resources, feel free to visit the SGX Research and Education website. We also have got content written on the EV sector on our website, including our view towards new. So do visit us if you'd like to find out more about the EV sector. With that, we can go into the Q&A session. Please feel free to bring up your questions in the Facebook comment section, and we can have a good discussion about some of the questions that you might have about the EV sector.
All right, thank you, Gerald. Well, now it's time for you to ask Gerald questions in relation to the EV market and also growth. And also, if you have anything to ask about, even the ETF that Gerald has just mentioned, if you want more details, of course, you can also find from SGX website and also go to Beansprout to get more information from Gerald. So if you have any questions, you can type it down. If not, I'm probably going to get the ball rolling a little bit before we get the others to ask questions. So Gerald, you mentioned that the raw materials costs, especially the battery side of it, right, which is a major cost for every electric vehicle, has gone up quite drastically, probably because of the Ukraine war, right? Russia and
Yes.
Ukraine war. But how do you see that, whether the raw material cost is going to continue to be high, because the crisis in Ukraine and in Ukraine is actually quite long, right? I mean, nobody probably expect that it has gone this long. But where do you see, even if the war goes on, do you think that the prices may go down, and we have other countries other than Ukraine or Russia that may be able to provide those battery raw materials as well?
Okay, so if we look at this chart, we have definitely seen a very sharp spike in the lithium cost. If I were to try to think about how this price will move over the next 12 months, I can break it down into short-term versus long-term drivers. So for the short-term driver, one of the drivers that you mentioned earlier was really this Ukraine crisis, which has impacted supplies. So that has definitely led to some of the increase that we are seeing here. But apart from that, we also have the issues relating to China, because of some of the lockdowns that we are seeing relating to COVID restrictions. And given that China is a very important hub for processing some of these raw materials, that would naturally cause the constraint around how some of these raw materials can be processed and leading to the sharp spike in prices. So I think if we were to look at how this can potentially be resolved in the near term, if there's going to be some relaxation around the COVID measures in China, that might help to release some of the pressure. The Ukraine crisis remains uncertain, so that is something that we'll continue to keep a lookout for. But in the longer term, if we were to look at where raw material prices are actually heading, with the very exponential growth in electric vehicles that we have seen, the demand is definitely growing very strongly. For the supply side, like we have seen for a lot of different commodities, it is not just for lithium, it is not just for nickel, but if we were to look at something like crude oil as an example, what we have seen is many, many years of underinvestment in a lot of these raw materials. With time, if there's going to be very high demand and if the prices are going to be remaining so high, there's going to be a lot of incremental investments that will be put into new production of this raw materials. But this actually takes time, which is why raw material prices always has very significant lows and very significant highs because of the time difference between investment and the actual production in itself. So, yes, in the long term, the demand is going to be much higher for a lot of these raw materials, which will continue to push prices up. But then at the same time, if prices were to remain elevated, what we'll probably see is that different producers will start to come in and increase the supply. But that is a process that will take time to actually take place, while some of the short-term constraints are still being there, which will keep the prices elevated in the near term.
All right, thank you, Gerald. Okay, we still don't have any questions from the audience yet. Maybe your presentation is quite thorough. But I have another question. We have all the other traditional car makers, right? The GM, the Fords, the Volkswagen, even the Japanese automakers like Toyota and Honda and the rest, even, like Korean car makers as well. So I mean, they have been producing vehicles, right? They are over the years. I mean, probably like tens of even 100 years. But but why are they not in the forefront in the electric vehicle space?
Okay, so you're right to say that effectively we have seen the likes of your Tesla, your new being ahead of some of the traditional automakers in being able to push out electric vehicles in the market. And I think that is where some of these startups have an advantage over the traditional automakers because they are more willing to invest in the technology, more willing to drive innovation in the market, to be able to bring the electric vehicle to mass production and for consumers to be able to buy them at a lower price. So, if we're to look at a lot of the technology innovation around electric vehicles, they are really driven by these startups. For example, if you look at NIO, we talked about the battery swapping technology earlier. That is really something that is new to the market. And I think it really takes the culture of a startup company to be able to think about such innovation. If we're to look at, say, autonomous driving, then another company in China, Xpeng, is really the leader in that, with a lot of very good technology in the autonomous driving space. So all of us know about the innovation around Tesla. I think that doesn't bear any repeating. But using these examples, we can see how some of the more innovative EV companies are at the forefront of driving EV adoption. But that doesn't mean that the traditional automakers are sitting by the sidelines and allowing these new automakers to be getting a very big share of the market. We have seen in recent years that they are starting to take note of the competition that electric vehicles are posing to the global EV sales, and hence they are starting to invest in electric vehicles as well. We used the two examples of Hyundai and GM earlier, but all the traditional automakers definitely want a slice of this global EV pie, given how quickly it is growing. There are some advantages that the traditional automakers have. So while they might not be as innovative as your new startups, what they are able to bring would be a lot of resources into the electric vehicle market. So if you're thinking about the financial muscle and resources that a company like GM or Hyundai has, if they really want to go into the EV market, then there can definitely be a lot of investments that are made in this space. As a further example, if I were to think about what further strength these traditional automakers have, so we mentioned earlier the entire supply chain of an electric vehicle, and a very important part of the supply chain is the distribution network. So for a new EV maker to start selling the EVs, they also have to put up significant investments into all your retailers and distributors in different markets, which is a very expensive exercise. But if a GM or Hyundai already has their distribution network in different markets, if they really want to be selling electric vehicles, then it becomes a very easy process for them where they can then use the same distribution network to be selling the electric vehicle as well. So there are some advantages that these traditional automakers have in the EV market. There are also some strength that the new automakers have. It remains to be seen who will eventually get a larger share of the entire pie. So once again, if we are not sure who is going to be the key winner from this entire shift to electric vehicle, then something that we can consider is actually to have diversified exposure. And that's again where an ETF would be useful, because we don't have to pick the winner, whether is it going to be this EV company or the EV company. We don't have to decide whether it is the automaker or the battery maker or the raw material producer that will benefit the most. Effectively, the EV ETF would offer us broad-based exposure to the entire industry.
All right, thanks. Okay, I'm not sure what this. There's a guy here, Kawanzol, asking a question or a statement, but we just say notify. But anyways, okay, I also have another question, right? I mean, like you mentioned earlier, I mean, China and even Europe and US are basically investing in building charging points for the battery vehicle, for battery, right? Um, I'm just curious because I have not really seen the different kinds of brands of vehicles, whether the charging points in the cars are the same. That means, will they be able to use the same charging stations or not?
Okay, so this is one area where the charging infrastructure is actually beneficial for the development and adoption of the electric vehicle. So it is pretty much like how you think about the petrol stations. So long as the
Mm.
battery type is the same, then these charging stations would typically work. So that is something that consumers can keep a lookout for in deciding which electric vehicle brand to be purchasing. But in most instances, the charging points are not specific to a particular model. And I guess that is where the general trend towards having more charging points in different markets would help with the general adoption of electric vehicles, because I don't have to travel a very far distance to be able to find the next charging point. I can actually do that fairly easily, and that will help to ease my concerns around whether I can get my car fully charged and whether I will find a situation where I actually am not able to continue using my car because my battery has actually run out.
Right. So yeah, like you mentioned earlier, right? I mean, this whole space, we also need to look at the whole supply chain, in electric vehicles, and also the infrastructure, because this is still something quite new, and this space is something that's gonna continue to grow. Probably in a few decades. So I think it's important, and you have brought it out very rightly as well, that we should be watching this space very closely, and there are a lot of other opportunities as well. So in Singapore, right? Are there any other companies that are involved in the supply chain of electric vehicles? I'm talking about listed companies in SGX, lah.
Okay. Unfortunately, for listed companies in the SGX, the exposure to electric vehicles at this point in time is still relatively low. I think for a lot of investors in Singapore, we have seen the very strong trend in EV demand over the last few years, and everyone has been scratching their heads trying to find a name that we can invest in through the entire supply chain, whether is it raw material, whether it's in battery, whether it's in automaker, whether is it in terms of distribution, in terms of the infrastructure. But those names have not been coming up through the years, which is why the recent listing of the ETF as well as of new has brought so much excitement into the market, because finally there are investment assets that investors can effectively put their money into if they believe in this electric vehicle theme and want to have exposure through the Singapore market. I think if I were to look at some of the names in the Singapore market, there are some companies that have got some exposure in very small ways, but probably not very significant, which is why investors have not taken them as companies that they would think about when investing in the electric vehicle market. So to give one example would be a company called ST Engineering. This is typically seen as a defense company where close to one third of the company's revenue comes through from various defense contracts that they have. But they also have a commercial business, and part of this business relates to smart cities. So how they can actually bring a lot of the technology around satellite to be able to help governments build smart cities. So that is in a way linked to electric vehicles, because electric vehicles are part of this entire smart city trend. But in terms of the direct exposure, it probably doesn't offer as much direct exposure compared to a EV automaker or a battery maker, which is why a lot of investors would think that the new listing and the ETF that I mentioned just now would be the key investment vehicles for anyone that might be looking at the EV space in Singapore.
Right. Okay. If we look at the EV space right now, we have relatively companies that are unheard of in the car making industry, right? I mean, we talk about Rivian and XPeng and BYD and so on and so forth. So do you think that they would be ahead of competition once the traditional car makers are starting to go big on electric vehicles? Because I mean, they are already established, right? They have the brand. I mean, like GM and Ford and so on and so forth. Whereas the others, like whether it's Neo or Xpeng and all that. But how do they actually keep ahead, right? From a competition that's going to come from these traditional car makers, and they're very, very aggressive now trying to get electric vehicles up.
Okay, so I think there are a few points to this question. So there are a few advantages that these smaller companies would have, and I'll cover two of the key points. Number one would be the ability to move very fast, and number two being their ability to innovate. So in terms of their ability to move very fast, I will go back to New as an example. So they actually started on their initial EV production back in 2016. And then if I were to look at the way that they've been able to grow their EV sales over the years, that has increased exponentially. Effectively, they are doubling their EV sales every year. So that is a very remarkable achievement for a new company. Uh, if I were to look at their production targets, that is something that they aim to be able to further increase over 2022 and 2023, such that with the increase in production, they are targeting to be break even by the fourth quarter of next year. So that is something that we see as edge for some of these new automakers, because they are small, they are nimble, they can move very fast, and that is also why a company like NIO has set for itself a target to be in 25 countries and markets over the next few years. So while it is starting out small, it definitely has got very big ambitions, and it can really go into these markets very quickly once it has set its target on it. The other area is really in terms of innovation. Again, because they are small, they are nimble, that also allows them to innovate at a much quicker pace. So for a lot of the innovation that we have seen, they've come through from the startup companies. I mean, I'm probably not call Tesla a startup anymore, given its market cap. But if I were to look at the EV sector, they are effectively the first company that achieved mass production of electric vehicles. They brought innovation in terms of battery, in autonomous driving, in a lot of different areas, such that it's able to be far ahead of its peers in the electric vehicle space. In China, NIO is seen as the leader in bringing the battery charging technology that allows the car owners to swap their batteries in a very short period of time. And then you've got Xpeng that is seen as a leader in autonomous driving technology. So that is another advantage that some of these newer companies actually have, because they are smaller and are more innovative in terms of what they're able to bring to the end consumer.
Sorry, I think I was muted earlier.
Yes.
Yeah, thank you, Gerald. We only have 5 minutes left, so guys, you have any questions for Gerald? You only have this 5 minutes opportunity to ask him a question. I have one question left for him. If you don't have any questions, you can, we'll end this session for tonight. But the recording of this session will be on the Facebook and also on the YouTube, so you can share it to your friends, those who are interested in the EV space. All right, especially in Singapore. Last question from me, Gerald. I have a lot of this coming from also investors, right? How do we value electric vehicle companies? Do we value them as a car company, or do we value them as a technology company? Because you look at, like, companies, or these companies, their prices are like, PEs, which is not seen in any traditional car making space, lah, right, or car makers, lah. But like Tesla and all that, I mean, the valuation is really crazy. Like, it's more like a tech company rather than a car company. So, in your opinion, how should the person look at the electric vehicle and how they should value it?
Okay, so I think it's a good question to end off tonight's session, because any discussion about electric vehicle stocks would naturally be around the valuation. So on this front, if I were to look at the valuation, one of the key things to consider is the very strong growth that the EV makers have seen, as well as how their earnings will potentially grow over the next few years as the number of electric vehicles sold continues to increase. So if I were to look at it from a price to earnings perspective, maybe only Tesla is profitable at this point in time. Most of the EV makers might actually still be loss making. So it might be harder to evaluate them from a price to earnings perspective, which is why most investors would think about them from a price to sales perspective. Even from looking at it from a price to sales perspective, there is a very wide range. Some of the Chinese automakers like NIO, based on a historical price to sales perspective, would be at about 4 times price to sales. While if I was to look at some of the US EV makers like Rivian, like Lucid, they can actually be above 100 times price to sales. So that is something that is a very broad range. I think the way that I'll think about valuation is whether the company is able to ramp up its production over the next few years that will enable it to enjoy higher revenue and hence profitability, such that 5 times price to sales stock can become 2 times, 1 times, and subsequently we can think about them from a price to earnings perspective. And also, I guess for all investments, do think about your risk reward, how much upside you think that can actually be derived from holding on to this stock versus the potential downside. Because it is important to think that if a stock has come down from 10 times price to sales to 5 times price to sales, there's very little benchmark as to whether it could end up at 2 times price to sales or 3 times price to sales. So that's just something that all investors should be aware about and think through carefully, especially now that there's a lot of volatility in the market, especially for the tech sector. So do think about the long-term trends, understand some of the short-term developments that we have discussed, and more importantly, think about the risk reward and the different product types that best suits your investment objectives and risk appetite before investing into the EV space.
All right, thank you, Gerald, for that pointer. So, guys, it is quite an interesting space. I mean, there's still a lot of room for growth, and definitely, I think we can treat this as a growth sector, right? When it comes to categorizing investments, but of course, we all know also growth kind of investments. It requires a slightly higher risk as well. So, like Gerald has put out very rightly that you basically have to look at what kind of investments you're looking for and objectives in your investment, and hopefully that the EV space will also be part of your portfolio, and definitely it's going to be quite an interesting space to look at. All right. So thank you so much, Gerald. I think it's already 1 hour. You have presented earlier as well. Thank you so much for your presentation and for your time to share with us, to our audience over here, and hopefully they are able to gain some knowledge and insights in the EV space. And for those who are here today as well, please do share tonight's session, so that, because it's going to be recorded, so that more people will be able to know about the EV space and the growth in this EV space. And also, please do check out Gerald's website, and there's also his Telegram group for Beansprout, where you can get more information and also connect with him and his team. All right. So thank you so much, and everyone also for joining us tonight. We wish you all the best, and have a good evening. And once again, Gerald, thank you so much.
Thanks, Benny. Thanks, everyone, for joining tonight. Thank you.